The ongoing conflict between Russia and Ukraine has oil and gas trending on Wall Street, all while gas prices rise above $4 a gallon. Is there money to be made in oil and gas, or is alternative energy still the next big play? Let's start the countdown and find out. Welcome back to the Investor Place Launchpad, where we take a look at trending investment ideas and try to rocket them to the moon. I'm Head of Mission Control Aaron Davis, and continuing from last week's examination of alternative energy, this week we look at the impact the Russia-Ukraine conflict is having now in the oil and gas markets. As oil prices continue to spike, ranging between $100 to $140 a barrel, oil stocks have largely risen across the board. With potential sanctions against Russia in the mix, investors want to know what the future holds in terms of oil and gas. As always, before we dive in, we'd love to continue to grow our channel here at Investor Place, so feel free to hit that like and subscribe button and smash that notification bell to stay up to date with us here at the Launchpad. With all of that out of the way, let's see what's going on with oil, gas, and the alternatives that may make for potential investments. While the future is unpredictable and no one has a crystal ball to see into the future, most experts are predicting that oil prices will continue to rise throughout 2022. With crude oil crossing the $100 threshold earlier than anticipated, Forbes contributor David Backman, who focuses on the energy sector, noted that regardless of the conflict in Ukraine, that prices will continue to rise, citing factors such as constrained capital and supply chain imbalances. Other analysts see prices rising to an average of $120 to $130 a barrel in the coming weeks. The best prediction right now for consumers at the pump comes from JP Morgan Chase, who issued a note on oil predictions suggesting that prices will average out around $110 in Q2 of 2022, with prices down to $90 a barrel by the end of the year. According to Bloomberg.com, that forecast assumes an escalation in tensions between Russia and West over Ukraine, alongside a nuclear deal with Iran that would still return some supply to the market. As oil prices continue to rise, for better or worse, this scenario creates a unique investment opportunity. As oil stocks have continued to rise, Eric Fry, editor of Investor Place's Smart Money, has been looking at the state of oil since early December, encouraging his readers to invest in a basket of oil stocks. Fry stated, "Everywhere you look, the world is turning away from fossil fuels and turning toward renewable energy technologies. Because of this powerful megatrend, many folks assume oil stocks and the returns they can deliver are a thing of the past. But oil stocks may not be as passé as most folks assume. Like the Rolling Stones, they probably have a few solid performances left in them." Though Fry recognizes that alternative energy is the future, he also is quick to suggest that the future is still in the making and that oil stocks remain a buy in the here and now of today. By further comparing oil to the Rolling Stones, suggesting a few more great performances left in both, Fry sums up his position noting, "The death of oil is greatly exaggerated, and I expect its price to deliver some upside surprises over the next year or two. A tightening oil market, coupled with a rising inflationary trend, provides ample reason to add an oil stock to your portfolio, at least as a hedge." Finally, this week, IP contributor Brett Kenwell looked at 7 energy stocks that will rise with oil prices. With the energy sector up 2.5% over the past month, Kenwell equates the coming growth not only to the Russia-Ukraine conflict, but a transitional return to normal from the past years dealing with a global pandemic. For Kenwell's full breakdown, you can head on over to investorplace.com, but Kenwell suggests that as oil prices continue to rise, these energy stocks should get your attention. ExxonMobil, Chevron, Halliburton, Pioneer Natural Resources, Occidental Petroleum, EOG Resources, and rounding it all out with Devon Energy. Looking closer at one of these picks, Pioneer Natural Resources is a company that has a market cap of almost $57 billion and is expected more than 60% earnings growth and a 1.4% dividend yield. PXD owns land in the Permian Basin that, according to the company, this vast patch of rugged terrain in West Texas is home to the world's second largest oil field. Decades ago, Pioneer first staked its claim to those legacy wells that hiccuped just 10 or 12 barrels of oil a day. We stayed, and now that commitment is paying off. Today, some estimates hold that the untapped resources spindled deep below the Permian Basin surface could rival the supply of what's now considered the world's largest oil field in Saudi Arabia. Like we explored last week, alternative energy is the most likely path when it comes to long-term investments. However, that doesn't mean that oil isn't still a need today as well as a viable investment. But what do you think? Is oil still a worthwhile investment today? Does oil still have a few great performances left? Or, as we looked at last week, is alternative energy the solution now? We'd love to hear your thoughts in the comments section below. Well, that's all we have for the Launchpad this week. If you like more insights like this and Brett Kenwell's full breakdown of energy picks, head on over to investorplace.com where we release articles daily. And as always, check back with us here at the Launchpad where we will continue to look for trends like oil. And as always, try to shoot for the moon.